Well, good morning, everyone, and welcome to the AM video edition of Traders Espresso for Friday, February 16th, 2018. The written blog is posted, the written version of Traders Espresso, and equities have posted their fifth straight day of gains. And whether or not today is the sixth remains to be seen. The futures turned soft after housing starts and building permits data came out and pointed to a little bit of a lower open. As of right now, futures are still down. They're off their lows for the overnight that were made in the overnight session. The cash markets are open and they are basically flat. I mean, the Dow is up 11 basis points. The NDX is up 7. The NASDAQ comp and the SPX are up 0.02% and the RUT is down 0.02%. The yield on the 10-year Treasury has come in. It's now at 2.871. The VIX is down. The VIX in the futures is down. It was up for a little while there, but it's come back in. Dollar index is up 44 basis points, and gold is down. Basically, call it flat. It's down 0.02%. Crude has been, spent some time above 61, so it's been catching a bid. I don't think that this bid is done. I may be looking at a long trade in the USO ETF later today as maybe an options play, if not outright playing crude in the futures. I'm also going to be looking at an options play in IWM, which is an ETF that tracks the Russell 2000, as well as FXY, which is the Japanese yen, assuming that I think it's going to clear the hurdle of a key technical indicator. So let's just go ahead and get right into that. Before we do that, let's just do a survey of the major indices and kind of see where they are, in our chart drawings. So starting with the Dow. Okay, the Dow is back into its long-term price channel. It's trading in the upper half of that price channel. It's on its way towards the upper bound of that price channel. Now, whether it breaks out again remains to be seen. The Nasdaq and the Nasdaq Composite both did that. Those two indices took the longest time to fall back into their price channel. I mean, they were fighting that tooth and nail, and they've now, if this chart will draw, you can see what I'm talking about. They have broken back out of that price channel. You can see this here with the NASDAQ 100. It broke back down the price channel barely. I mean, it didn't even spend any time down there. It didn't touch the midpoint, which is what a lot of the other other indices have done. And it's broken back up out again. Okay, I think as far as going into an overbought territory, the NDX is going to hit there first. Now, how long is it going to stay there before it comes back in? I don't know. I mean, if I look at the Dow, the Dow can get there too, as can the S&P 500. But the Russell 2000, is painting a little bit of a different picture, and this may be a pullback, for the indices. But if I look at the Russell, so the S&P is at 51, which is kind of halfway between your 20 and your 80. The Russell's at a 50, okay, but I'm judging it based on where it is in these drawings, okay. It can still trade up to this midpoint, which would be a move from about 1540 up to, say, I don't know, 1607. So that would be a nice move. I think that one gives me the least pause as far as a run up continuing. The Russell 2000 is just at this 27 period MA. The NASDAQ is well above it. It closed above it and it's been 2 days above. The Dow just broke above it yesterday, and the SPX, rather the S&P 500, did a similar thing, if memory serves. I have to pull out my memory because the chart's not drawing. So yeah, so same thing. 3 days ago, or two trading days ago, not including today, the SPX and the Dow were both below that 227 period MA. They broke above it, and now they're moving above it. So I think that the Russell presents the most attractive opportunity if you're going to play this to the long side. If you're going to buy the IWM or the IJR, those are two ETFs that track small cap stocks. You could go with individual stocks, but I don't have any recommendations at this point. If you do that, then you're on your own. Do your own homework for that. Like I said, I'm also going to be looking at USO, which is the ETF that tracks oil. Right now, I would want to look at the stochastics on this one. Longer term, and when I say longer term, I'm talking like, looking at the 4-minute chart, the 15-minute chart, looks like making a move to the upside. If I zoom out and take a look at the 1 hour, we're seeing a possible bearish crossover. And if I look at the 4 hour, we see some tension there. And if I look at the day chart, that's the most compelling one. Shows that after the previous time frames have played themselves out, this is going to make a break to the upside. I mean, it's closed above its own 27 period MA. From a technical standpoint, 1 second. Let me draw this from a technical standpoint. So if we want to take a look at, recent lows, and draw our Fibonacci to the highs that were set on the 26th, okay, USO has somewhat respected the 61.8 fib as a level of resistance. You can see it kind of bounced around in this level here, broke through. It's respected the 38.2 as a level of resistance because it bounced back. It broke through, traded up to 13.3, came back down, didn't quite touch it, but it's bouncing off of this level. So if this strength continues, then I would expect it to go ahead and trade up to this trade back up to this 1330 level. Things seem pretty, bullish from a fundamental perspective. It seems like the things that OPEC is doing to normalize inventory have panned out. The number for the EIA and the API, they came in and reported a little bit of a bigger build than people were expecting, so that was kind of short-term bearish for oil prices. Those numbers came out on the 14th, was Wednesday. But despite that fact, oil has recovered from that point. So the inventory came in a little bit hotter, or a little bit higher than expected. That was short-term bearish for oil prices, but oil prices have recovered. We'll see what happens when the Baker Hughes rig count comes out. That comes out this afternoon. The rig count came out last week, which would have been the 9th, and it was the biggest. It was the highest number. Added the highest number of rigs in a while. Okay. If today shows, no net additions, or maybe like 1 or 2 rigs being added, 3 possibly. I think that this bull run in oil will be okay for the foreseeable future, which by that I mean like next week or two. The FXY is the ETF that tracks the yen versus the dollar, and I was taking a look at this as I was writing this morning's edition of Traders Espresso. If you take a look at, let's zoom this out first. Because it set highs yesterday, I don't want to draw a Fibonacci here because it doesn't really tell me anything. It just tells me, oh, it could bounce back up to 90.45. So I want to zoom out to the week because a high was set here. That gives me something. I mean, a low is set here. I don't want to draw it from here to here. I want to draw my Fibonacci from the recent high to this low, to this recent low that was set. Okay. The yen has traded down here, and it did again. You can see the 38.2 level acting as some resistance. We have kind of a, I don't know if I want to call this a double bottom or a triple bottom. It's not really even a head and shoulders bottom necessarily, but it is bottoming out here at this level. I'll draw it on the chart so that you can see it. Or don't. It hit this level multiple times, okay, and it's a bounce off of that. Now it's approaching the 61.8 fib level. So watch it here. It seems like the yen trade today has been slowing down just a little bit because we're not seeing like moves up of 0.5%. The move that we saw today when I wrote Traders Espresso before the market opened, at the time it was only up, I don't even think it was up 10 basis points. It's now down 3 basis points, so it's down marginally. But the level that I would be looking at, again, is this level right here. So keep an eye on that. If it breaks through and closes above this level on your day chart, then I would write it up to 96.82. Take a look at a possible stop here where the 243 period MA is, and I know I use weird moving averages. That's roughly equivalent to your 200 period moving average. So draw it however you want to on the chart. Just be mindful of that average. So those are my trades today, that I'm looking at, possibly going into the weekend or maybe, first thing Monday morning. IWM or IJR for the Russell, USO for oil, and FXY for the Japanese yen. So that's it for this morning's edition of Traders Espresso, this morning's video edition of Traders Espresso. I hope that you all have a great trading day, and we'll see you around. Thanks. Bye.